Good morning, Alan. How many members of the committee are on the platform?
Good morning, Chair. There's currently 7 members on the platform.
No, okay. So we have to start with create. Uh, Good morning, honorable members of the Standing Committee Finance. Let me welcome officials from National Treasury and other entities under National Treasury. Let's welcome the stakeholders, members of the public who are here to make submissions, our support team of SCOF and other teams of parliament, and the public, and the media and the public, you are all welcome. Today we are conducting public hearings on the general laws, which is also called the Anti-Money Laundering and Combating of Terrorism Financial Amendment Bill, B15, 2026. Public hearings are quite very important because these are sittings where citizens and organizations make oral presentations directly to parliamentary committees. Public participation is the cornerstone of democratic lawmaking. Therefore, this process enhances democratic legitimacy and trust. It deepens representation. Participatory democracy extends beyond voting in elections every 5 years. Active public participation allows ongoing engagement between voters and their elected representatives. So it is quite important that stakeholders should participate in lawmaking. The meeting is officially open. As I've already welcomed all of you, let's go to apologies. Alan?
No apologies received, Chair.
Okay. No apologies received. Let's move to the next item of stakeholders making presentations. Alan, we're allocating each stakeholder 10 minutes, isn't it?
That's correct, Chair.
Okay. Colleagues who are going to make submissions, please time yourself so that I don't disrupt your flow towards the end when you will have gone beyond the 10 minutes. So make sure that when you start, you do timing. Make sure that you strictly stick to 10 minutes. We'll start with Mr. Mike Boss. Mr. Mike Boss, there you are. 10 minutes for presentation.
Honorable Chairperson, honorable members, I address you today on the single most critical dimension of anti-money laundering. Without robust implementation, the law is a dead letter. This is also the sentiment expressed by John Foster Pedley of the University of Reading and the Henley Business School in today's Business Day. The issue, he says, is no longer a poor rulebook, but showing that the rulebook bites. My contribution today is about 18 minutes. No, I will not take 18 minutes of your time. I only have 10. I refer to the 18 minutes it took for a South African bank account to be filled, drained, and laundered in full view of systems legally mandated to stop it. Honourable members, what I'm reporting here today is not a glitch in the system. As it stands today, it is the system. On the 8th of November 2024, at 11:57 and 42 seconds, 150,000 Rand was stolen from a Nedbank private banking client through a phishing scam. 2 seconds later, 2 seconds, Nedbank's internal fraud system suspended the victim's account. Real-time detection. It works. The bank proved in that single second that its technology can identify fraud instantly. Yet where did the stolen money go to? It landed in a Nedbank corporate account belonging to Hollywood Bets, holding over 5 million at that moment. Nedbank claims it suspended that receiving account 18 minutes later. However, SAP's subpoenaed records tell a very different story. Funds continued to move freely past that claimed suspension. Nedbank emailed Hollywood Bets asking them to secure the funds. 10 hours later, Hollywood Bets replied, no funds were secured. Meanwhile, within 18 seconds, yes, 18 again, the funds moved from Nedbank to Capitec. What followed was the cleanest, most textbook money laundering sequence you will ever see documented. In a letter provided in my submission, Hollywood Bets confirmed in writing on its own letterhead that before anyone alerted them, the fraudster placed bets, withdrew the winnings, and emptied the account. That is not an excuse. It is a confession. It is a description stage by stage of placement, layering, and integration. The 3 textbook stages of money laundering, written by the operator itself. 6 withdrawals, every single one a clean round number. A manufactured gambling win designed to wash the illicit yield. And just 18 minutes after the initial credit, the account sat at minus 33 cents, emptied. Capitec filed no cash threshold report on a deposit 6 times the legal limit. No suspicious transaction report on a pattern a first-year compliance officer would flag in their sleep. Nothing, not a beep. 1 victim, 1 hour, 3 licensed institutions, 3 complete structural failures. Honorable members, as it stands today, this is the system. When the victim was shunned by Nedbank, they turned to me, and I went to our regulatory authorities. What followed was an extraordinary relay of bureaucratic avoidance. The National Gambling Board took 29 days to respond, declaring not our jurisdiction, try the province. The Provincial Gauteng Gambling Board responded for the first time on 25 June this year, 19 months after my first complaint, and only just acknowledged. On 20 July, they stated that they were still investigating. On 28 July, they reminded me of their time frame, 70 working days to investigate complaints. Yet it took them 19 months to tell me they need 70 days. The Financial Intelligence Center remained silent for over 6 months. When an official finally responded, his guidance was to do the responsible thing and hire my client a lawyer, because he said I was obviously not one. And I should also open a police case. Let us be clear. A regulatory body that views a complaint as groundless dismisses it. A regulator that advises to lawyer up tacitly acknowledges merit, yet in this instance chose not to act. This is not oversight. This is institutional paralysis. Every link in this chain passed the responsibility onward. Nedbank declared the matter closed. Hollywood Bets threatened defamation action for quoting their own written admissions back to them. Capitec argued that because the money originated at another bank, it was not their issue. Think of this logic. A licensed institution claiming immunity to money laundering because the funds crossed institutional borders. 21 months later, today, not a single one of these bodies has taken any enforceable regulatory action. We spent 32 months on the FATF grey list for precisely these structural enforcement failures. We worked tirelessly as a country to exit that list. If this committee wants to know what re-grey listing looks like from the ground level, It looks like this: a bank that detects fraud in 2 seconds, but allows the destination account to drain. A gambling operator that admits in writing it cannot verify who deposits money into its accounts. A receiving bank that dismisses duty because the funds crossed an interbank line. And statutory regulators that respond to 21 months of clear evidence with a collective shrug. No enforcement action. No account holder data surrendered under FICA protocols. A wall of obstruction against SAPS subpoenas. Every major systemic collapse begins with something dismissed as too small to matter. A single victim, a single transaction, a single complaint ignored. Financial infrastructure rarely fails all at once. It collapses because small, routine failures are permitted to become normalized. If the Financial Intelligence Center, the Prudential Authority, and the Reserve Bank cannot muster the enforcement will to act on a case this contained, this clear, and this thoroughly documented, complete with timestamps and written concessions, what confidence can Parliament have when the figure is not 150,000, but 150 million? When the victim is not an individual citizen, but a province, a pension fund, or the sovereign integrity of our financial system itself? Oversight is one of those fascinating words in the English language known as a contronym, a word that can mean its exact opposite. Oversight can mean watchful care, or it can mean an omission, a failure to notice. Honourable Chairperson, I am deeply grateful for the opportunity to appear before this committee today. My presence here is grounded in an unwavering conviction that Parliament is an indispensable constitutional safeguard of our Republic. The matter before you extends far beyond one fraudulent transaction. You are charged with a weightier systemic responsibility, determining whether South Africa's financial regulatory framework inspires the confidence our national economy demands. The evidence shows that our watchdogs have allowed oversight to lapse into omission rather than watchful care. When executive institutions have passed the parcel, I have full confidence that this standing committee will not look away, but will rise to meet this moment with the parliamentary rigor it demands. We cannot leave the smaller gates unguarded and expect the fortress to stand. When regulators fail to address clear, granular non-compliance, they forfeit the trust needed to manage the macro stability of our national financial architecture. I return to my opening premise. Without robust, uncompromising implementation, the law remains a dead letter. Chairperson, this concludes my remarks. The sagging, slack wire financial ecosystem fence is collapsed. If ever a war was demanded, this is it. I thank you.
Thank you, Mr. Mike Boss, for your presentation and also saving 2 minutes of the time that you were allocated. Thanks. Let's move to the next stakeholder, NPO Working Group. There is a request that, if possible, please show your face, unless you have got the challenge of network. Thanks. Over to the NPO Working Group.
Good morning. While Chelsea is getting the slides into presentation format, let me introduce myself. My name is Ferial Domingo. I'm the Acting Executive Director for Untitled and also the Chairperson of the NPO Working Group. I'll be sharing the slides today with Chelsea Swanepoel, who is an attorney with NGO Law. And so let's kick off. Chelsea, can you put it in presentation format?
I'm so sorry, I thought it was. On my screen it is. Let me see what's happening. Give me 2 seconds, sorry.
Thank you. Okay, just. Mhm.
Cool. Is that better? Yes.
Thank you. Thank you. Thank you. Okay, great. Right, let me start. So on the next slide, right, so just a little bit about who we are. I think the context is very, very important. The NPO working group really emerged in 2021. And this was when approximately 190 representatives from approximately 170 organizations participated in an open sector webinar on the proposed amendments to the NPO Act, right? And so this representative group was then formed to coordinate engagement, keep the wider sector informed. And we decided that we wanted to provide meaningful support so that participation in matters of legislative and policy processes can be broadened. And as not a lot of us had knowledge and understanding of this. And so this group is really, it comprises of a large number of individuals and organizations that includes NPO leaders and practitioners, sector support and philanthropic organizations, legal, governance, research, and regulatory specialists, as well as independent experts with extensive nonprofit sector experience. What have we achieved? Well, since then, we have emerged and engaged consistently, not only when bills reach Parliament, but throughout policy development. We've been drafting, we've been consulting, and we have obviously, we feel that we've led things towards implementation potentially. Our membership combines the practical experience of organizations working in communities with expertise in nonprofit law governance, research, regulation, and public policy, as I've already stated. We have thus far mobilized the sector participation in major NPL, AML, CFT legislative reforms since then. For example, to prepare for today, we engage in several webinars with over about 200 attendees who we received questions up front to pose and views to share so that we can be more inclusive in the presentation today. This has also, we feel, contributed to the withdrawal and redrafting of problematic proposals and secured additional opportunities for public participation. We've presented submissions to Parliament and engaged National Treasury, Department of Social Development, SARS, and the FIC, and financial sectors regulators. We've produced national research, policy analysis, webinars, and public communiques on FATF Recommendation 8 and its unintended consequences. And we continue to do this so that we can make sure there is awareness within the sector. And then we've reached out to as far as wide as our networks allow us, because through this we know that if we go deep, the breadth and depth and the variety of the sector is much greater than a single collective can reach. So we do not speak with every voice, right? This is who the sector is. As you can see, I've already spoken about them. They're really very, very much far wide. It's from churches to institutions to NPOs to just a whole range of organizations that is just too much even to mention. There's a long list. Right now, this is the NPO sector. Who do we serve? When we speak about the NPO sector, there is a tendency to imagine a relatively uniform group of charities. The sector is much broader than that, right? It includes schools, clinics, retirement and residential facilities, faith communities, sports associations, professional bodies, environmental organizations, community safety initiatives, humanitarian organizations, housing associations, and organizations serving people throughout their life. It's a bit difficult to identify a South African who does not interact with a non-profit institution, be it directly or indirectly. The sector is not situated outside of government, business, or family life. It is woven through all three, frequently providing services, support, and community infrastructure where neither the state nor the market can adequately respond. And so we feel the lack of current comprehensive sector comprehensive sector data is itself relevant to this bill. It is very, very difficult to design differentiated risk-based supervision if the state does not have an accurate picture of the organization that it is regulating. I do want to just add here that there are several structural issues: outdated baseline data, fragmented government databases, and invisible economic benefits. So when we speak about this depth and breadth of the sector, it is vast, it is so permeating, and it is so different. It is difficult to measure good and bad, and it is impossible to do so with a single yardstick. And so we feel that assessing and measuring the sector against the risk it poses requires empathy for its experience, its operational and governance structure, and its needs. The nonprofit sector is not a single uniform group of organizations. It includes everything from small volunteer-led community associations to large national institutions and organizations operating internationally. This diversity matters when considering how the bill will actually work in practice. So there can be no effective one-size-fits-all. And so the bottom line here is we encourage you to stick around for the whys and hows, but to start with the short version, right? So Chelsea will go over that. But let me just quickly tell you, the bottom line here for us is, are we happy with the bill? Well, we will only know how happy we are when DSD implements the systems that are set up to enforce it, but there's nothing that Parliament can do about this at the moment. Well, the next question, will this fix grey listing once and for all? It plugs an immediate need coming from the legislative changes in 2022, but without additional reform or system efficiencies, the state cannot effectively identify terrorist financing vehicles, let alone sanction them appropriately. And the final question, what are we asking Parliament to do? Well, we'd like you to understand the depth and breadth of the nonprofit sector, much as I've spoken about, how it supports South Africans, and create laws and policies accordingly. Thank you. Let me hand over to Chelsea.
Perfect. Thank you so much, Ferial. Thank you for the overview. This discussion today, we're approaching you as a nonprofit sector who wants the same thing as the state and as FATF. The nonprofit sector relies on its credibility, transparency, and accountability in order to receive funding, in order to be legitimate, in order to operate and do the work it does. It needs trust, and that trust requires credibility, transparency, and accountability. The bill does seek to do that, and we're happy with the mechanisms that have been designed. We're happy with the appeals procedure, the limit on sanctions that were previously unspecified, and the introduction of administrative sanctions, because now status will be, NPO status is compulsory for some, and the loss of the status would mean the end of the organization. So we're happy with these. But our concern, as Ferial was saying, is in how this is going to translate into practice. What are the measures that measures as in rulers and tape measures that we're using to assess the nonprofit sector for compliance? And is the data that we're getting from that actually translating into more credibility, transparency, and a robust reporting system? These bullet point concerns, I'm sure you can read them in your own time. I'm not going to speak to them too much, but at the end of the day, we want trust and collaboration with the departments that govern this sector. It is a big sector. It is an impactful sector. And at the moment, it cannot be concentrated in a single department. Our concerns in the wording of the bill, well, it's the as prescribed. That's speaking to the fact that most of how this translates to our actual sector is going to be done through regulations. And that we can't comment on today because they're not available to us. But more than that, the sector longs to be compliant, but we do not have a system where we can see our own compliance. And I'm going to give some examples of that. If we're looking at the online system that the Department of Social Development has created for these NPO applications to be automated and processed more efficiently, we commend that. We love any effort to more efficiency. However, I had an example of a client. They are a faith-based youth leadership organization that uses football as a tool to combat addiction. I'm applying for NPO status for this organization. These were the categories on the screen that were given from the DSD online system. I am not sure how to place this organization into one of those categories in a way that makes sense. I then found whichever button I pressed, the same list was given to me. So we're not effectively sorting and filtering for the kinds of information that that DSD is looking for. And this is a very simple fix. Our colleagues in submissions today have spoken about how FATF needs us to have good legislation, but strong and robust information infrastructure. We need better ways of capturing crucial data, better ways of storing and accessing it, and forensic expertise on the ground to identify specific risks and apply appropriate responses, not a one-size-fits-all approach. I know we're short on time today, but I just needed to say, we as a sector and beneficiaries of it are being asked to put our trust in a system that has failed us time and again. We cannot have this bill as the only solution to NPO, non-profit legislative reform. We require, as a sector and as a country, we rely on administrative justice, which plays out in the systems that are designed for us. Legislation feeds those, but the actual systems are the things that everyday South Africans encounter. We need them to be robust. We need them to be appropriate. And we need reform in the sector as a whole, holistically, in an understanding way. Yes, this bill plugs an immediate need, but this cannot be the end of the conversation for nonprofits and nonprofit legislative systems. As lawmakers, you're tasked to design a legislative future for people who want to make things better, where they're able to do this safely and sustainably. You're empowered to build something bigger than any of us that will outlast all of us and serve generations of South Africans and the world to come. We ask that you do so. Thank you.
Thank you, NPO working group. Our next stakeholder, COSATU. Comrade Matthew, over to you. 10 minutes.
Morning, Chair, morning, members. Thanks for giving us a chance just to share our views. Just give me, I always struggle, Chair, with with some of this fancy technology. Just give me 1 second. Okay, hopefully it's fine, Chair. Yeah, I think from our side, Chair, as COSATU, we just want to indicate our support for the bill. We think it's important for our members, for workers, and we don't view this as just a technicality, Chair. The issues of money laundering, of state capture, of corruption, of terrorism financing, in particular the involvement of domestic and international criminal syndicates is real. It means that public funds are stolen. It undermines the capacity of the state to enforce the rule of law. And of course, it has a real impact upon workers directly and indirectly. So in short, Chair, we support as COSATU any legislation that's going to strengthen the capacity of the state to fight crime and corruption and to tackle illicit financial flows, whether it's internal or external. Chair, of course, as COSATU, we're always influenced by the socio-economic crisis facing society, especially workers. We think it's always important to remember we have a 43% unemployment rate. For young people, it's above 60%. We have really entrenched levels of poverty, of inequality, of crime and corruption. We've seen public services under severe strain over the past 2 decades, often because of budget cuts, and often this is because of monies lost to corruption. Chair, also linked to this is that we're having an economy that's been stuck at 1% growth for the past 15 years. Investment levels are stagnant. And so the impact upon workers, whether directly or indirectly, is retrenchment, as salaries not being paid, for example, at a municipal level or at an SOE, is collapsing municipalities, it's understaffed hospitals, schools, etc. And these have really been made worse by our cancer of corruption and state capture. I think we all know the figures, from the Zondo Commission, 500 billion rand lost to state capture. And again, that could have done a huge amount of difference for investing in economic infrastructure, public services, creating jobs socially for the poor, etc., etc. And often, Chair, we've seen that these criminal syndicates, they don't declare themselves as criminals. They find ways to launder money through banks, through trusts, through shelf companies, even through NPOs. They're not going to declare themselves naturally. But again, Chair, this has had a huge effect, state capture upon public services. It has scared investors. It has really taken a toll on the economy and jobs. And it sent a very negative message, Chair. If you look at any international news agencies, that South Africa is just not safe for investment. And that's something we just can't continue to afford. Chair, I think, we made huge progress over the past few years, led by Treasury and other government departments, Parliament, including SCOF, in the previous Parliament, with the other critical agencies, FIS, NPA, SAPS, etc. Also with the support of business labor. That collective efforts, Chair, helped South Africa to exit grey listing. It was not easy, 2.5 years of real hard work. And it was precisely we were grey listed because of our gaps around money laundering, around terrorism financing, etc. So, Chair, we feel this bill builds upon that progress. And I think, Chair, we're all kind of sensitive to that. FATF has increased the threshold requirements. The next review is just over a year away, and it's going to become increasingly strict. And we just can't afford to be grey listed once again. And there's a real danger in that consequence. If we're grey listed, Chair, again, it's going to spook investment. Often pension funds, international investment funds, are prohibited by the rules, by legislation from investing in grey listed countries. This means pressure upon our efforts to create jobs. We increase the rate of borrowing for banks, for the state, etc. Again, that bleeds the fiscus. And of course, there's reputational damage that we're not serious about dealing with crime, etc. So that spooks growth, spooks investment. So we just can't afford to once again flirt with grey listing. We have really been quite concerned over the past few years. You would see smoke, you would see noise, you'll see media reports about international syndicates targeting South Africa, whether it's around drugs or human trafficking, whether it's around illicit goods coming in or out. We know the issue of cigarettes, fuel, mining, etc., the cybercrimes issue, terrorism financing. You'll see reports of cartels from Mexico, etc., setting up camp in South Africa, even in Limpopo, Chair. So it really is quite worrying. And obviously money laundering is critical for these ones to operate. So if we're able to preserve and protect the integrity of our banking systems, that's key to really blocking them. I think the bill is correct in terms of that FIC must be in compliance with UN Security Council resolutions. Again, we need to have this clear message that South Africa honors its international obligations and that our systems will not be conducive for funding terrorism or money laundering, etc. We think the bill provides useful obligations or strengthen obligations for banks and financial institutions to conduct due diligence, to report suspicious transactions to the FIC and law enforcement. And again, Chair, many of these institutions also have workers' pension funds invested. And again, we need to protect those. We've seen, for example, Chair, how Steinhoff, when it occurred, that workers' pension funds are often the first to be exposed. We know the issue of the NPO scrutiny is sensitive, but again, Chair, when you're dealing with international syndicates, you're not dealing with the Pope or angels. These are people who look for any gap, will exploit the good name of NPOs, and will try to find a way to launder the money through that avenue. So we think, Chair, it is correct to scrutinize NPOs as well, just like we must scrutinize unions, we must scrutinize business, etc. But it also protect the good reputation and the work that NPOs do, and also protect the funding that they require. If we can make sure that our systems are strict and there's no space for criminals. We're quite pleased, Chair, that this bill builds upon the discussion we had in this committee, I think it was in 2023, before we went to the last elections, around the issue of company trusts, beneficial ownership, etc., who owns what, etc. It correctly extends preserving company records up to additional 2 years to 7 years. It deals with the issue of shelf companies, trusts, etc. And again, Chair, to state the obvious, we're not going to win this war against corruption if we don't know who owns what. And we're dealing with very sophisticated syndicates with lawyers, etc., who will find ways to abuse the system. So, Chair, I think we're quite pleased that this further clause is dealing with beneficial ownership and transparency. Just getting towards the end, one of the most important parts of the bill is really to empower the FIC to undertake lifestyle audits of persons of interest, to monitor the assets, to share this information with relevant law enforcement, whether it's the NPA, SAPS, SIU, etc. And again, this is a key tool in the war against corruption. And we should, one can argue about the issue of privacy, but when we deal with this cancer of corruption, then yes, we do need a bit of scrutiny of politically exposed persons, senior persons in the private sector, etc., persons who can't explain certain financial transactions in their bank accounts. And again, Chair, the sharing the information between the FIC and law enforcement is really long overdue, and we look forward to that being implemented in particular, because we have had instances of challenges in that regard. Yeah, so I think just getting towards the end, in terms of recommendations, I think for us, we recommend, number one, expedite the passage of this bill. We know Parliament may often take 2 years, but I think given the October review next year, we'd really want to see this bill being passed long before then. So as an additional signal that South Africa is turning the corner against state capture and corruption. But also, Chair, we can have wonderful laws in English on paper. It requires that we resource these law enforcement institutions. So we must make sure in the MTBS and in the budget next year that the FIC, the NPA, SAPS, SIU, other law enforcement institutions, the courts, have got the necessary financial, personnel, technological resources to enforce the bill's objectives. So really what we want to see, encourage when we do the MTBS in October, November, a thorough discussion in this regard. And we also think with regards to SCOF, it would be critical for the FIC and Treasury to provide regular reports around the implementation of the bill, preparations for the FATF review next year, October, and what are the specific interventions that government is already busy with and will need to continue to be busy with to avoid grey listing next year. In conclusion, look, we think corruption and money laundering are not victimless crimes. It means there's less social grants to help children, there's less medication in our hospitals and our clinics, and it means there's less jobs for workers. We think this bill is a progressive bill, is going to help protect workers, public resources, and the economy. We support the bill, Chair. Might be proposals from other colleagues to further strengthen it. We don't oppose that, but in principle, we support the bill. And of course, it needs to be matched with political will, with funding, with enforcement. And we don't think, Chair, we should take this issue lightly. We really just can't afford to be grey listed again next year. That will be a huge blow to our collective efforts as government, as business, as parliament, as labour, as society to attract investment, to save and create jobs. And again, Chair, we really cannot afford to be a society which is seen to be soft on crime at any level. So that's our presentation, Chair. Hopefully we stuck to timeframes, and yeah, thanks, Chair and members, for giving us some space on this important bill. Thank you, Chair.
Thank you, Comrade Matthew. Yes, you use your 10 minutes exactly. You started at 9:29 up to 9:39. Thanks. The next stakeholder, Chartered Institute for Business Accountants. Over to you.
My apologies. Good morning to everyone. Good morning, Chairperson and members of the committee, and thank you for the opportunity for us to present today. I think my presentation is visible. Is that correct?
Yes.
Thank you. My name is Esther Rapanos, and I'm representing the Chartered Institute for Business Accountants. I will explain our involvement and functions relating to the General Laws Amendment Bill. We are basically a professional body of accountants that we support a lot of non-profit organizations in various ways, but mainly through our business accountants in practice, who are accounting officers who assist NPOs with their financial statements, narrative reports, registration, etc. So from my side, we are coming into the bill in order to ensure that it is a safe place for our business accountants to work in. And also, we worked in the past couple of years quite closely with the NPO working group and also with ANET, the Alliance of Nonprofit Networks. And I myself was part of the technical task team that compiled the terrorist financing risk assessment for NPOs in South Africa. So we do come from a perspective of knowledge. And my presentation today, thank you so much for allowing me to do this presentation, is specifically on clauses 2 to 5 of the bill, which is relating to nonprofit organizations. I'm not going to repeat the facts and the background provided by my dear colleague Ferail earlier from the nonprofit working group. So I'm just going to build on that. And we also submitted a written submission that will highlight, the changes that we would propose to do to the bill. We are in support of the bill. We have been working towards getting the sector in compliance with the FATF recommendations. However, there are certain aspects of the bill that we would like to strengthen. So given that, setting up the sector in a way that it can actually work properly relies on a good framework. So we do believe that the bill will provide that framework. And there are a few things that we would like to recommend. So this is just an overview of what the bill does. It basically, have the 4 clauses that relate to NPOs and determines who is monitored, who is supervised, when non-compliance can be challenged and found, determines how the decision can be challenged, and determines the consequences. Okay, so we do have our recommendations, and the first one is that I wanted to bring to the table is the fact that the Directorate is being given monitoring and enforcement functions across a very large NPO sector, and currently we know 273,000, or we are aware of 273,000 organizations that exist in South Africa. And currently, nothing requires in the law itself that the organizations and efforts of monitoring, supervising, enforcement is relating to the risk that is in the NPOs for terrorist financing. So that is actually a FATF requirement as well. So why that is worrying is that we would like to bring in the proportionality and risk-based approach in a way. And I think there needs to be an understanding of what that actually means, because we can actually get into a situation where it will become someone's judgment call on whether, the risk is high or low. So we would like to propose that the criteria on which the organization is risked as high, medium, or low risk is published and reviewed by the department every 3 years, or the Directorate. And we would also propose that the Directorate should report to Parliament on the way they exercise their powers. So these are our recommendations on Clause 2. And as I said, the wording and all the details are in the written submission as well. So our next concern is the fact that the monitoring and enforcement is put on the Directorate and gives the director the power to impose administrative sanctions. So again, there is, we are not suggesting that any official will act in bad faith. It is just a good practice to bring in a separation of duties and functions. And we think that this has a place in the Act, not in the regulations themselves. So this should be elevated to the level of the Act. So we propose that the separating the functions from the directorate or inside the directorate, so the officials that actually consider the sanctions are not are separate people, segregation of duties. Okay. Our next recommendation deals with has 3 parts. Okay. The first one, and we do support these safeguards. The first one, the bill says that the director may impose administrative sanctions as prescribed. And again, when we say as prescribed, we revert back to regulations. The important safeguards are currently in these regulations, and that is not, questioned, and it's not under scrutiny today. So our concern is that they are in regulations rather than in the Act itself. And these regulations can be amended by the minister, which again gives power to the directorate and to the minister. So these essential safeguards, we believe, need to be put in the Act. Secondly, the bill refers to the reasons as part of the appeal, but does not expressly require the director to furnish written reasons when imposing a sanction. And that is very, very important, and it should be explicit, because an organization should know why the decision was made at the time the decision is communicated. And thirdly, the bill does not provide for an activity stopping sanction to be automatically postponed while an appeal is pending. So a sanction comes in, Section 14 allows the tribunal up to 3 months to determine the appeal. And if the organization's activities are suspended during that period, the people receiving the services obviously will not receive the services. So we would like that to propose that the sanction restricting suspending activities should ordinarily wait until the appeal is approved, and also throughout the appeal process, which can take some time. Okay, so that's our 3 recommendations on that. Recommendation 4 is about clause 5. And I think this is the most important one that I wanted to bring here today. And we do not object to the bill setting the maximum penalty. In fact, this was one of the things that FATF required to bring in. So our concern is not the maximum amount, around 1 million or 5 years of imprisonment. It is the fact that the Act does not expressly distinguishes between deliberate or unintended conduct. So, for example, if I can give an example, Section 29 covers representing an organization when it is registered or not. When it is not registered, Section 29 will kick in if they carry on operating. So if that is the case, if an organization has been deregistered, but they are still running and they have not become aware of the fact, they fall under the same provisions as someone who did a culpable, knowing material misstatement. So we are proposing that the law should distinguish between a deliberate wrongdoing from a conduct when the person is made an error or was not aware of what has happened. Okay. Then we come to the end of why this happens, and the final point is coming back to the fact that this is a vulnerable sector, and it is very, very important that our framework is set up correctly, that it functions. And we have heard previously that we do have issues with the systems, with the way outreach is done. And also this sector is also, in auditing terms, we say the completeness. So we don't really have sight of what is out there, because if an organization is not registered, then we lose sight of that organization. So there are lots of different risks that we need to consider this. But with the risk assessment that was done in 2021 or issued in 22, the sector's terrorist risk is rated on a medium level. And that we need to really consider as well here. So what is the actual impact of this, and why we do need to say that out of that 273,000 entities that we are aware of, how many of them are actually at risk? So, and why do we want the entire population to bear the consequences when they are not really targeted and risk carrying organizations? So I think this is the end of my presentation. Thank you so much. And this is just a repeat of my 4 points. I think the written submission states it very clearly and also proposes recommended amendments. So thank you so much for giving me this opportunity. And I would like to say goodbye. Thank you so much.
Thanks, Chartered Institute for Business Accountants. Now is the opportunity for members of the committee to ask questions to the stakeholders. Colleagues, over to you, if there are questions that you want to ask. Honorable Squati. Honorable
Thanks,
Squati.
Chair, and thanks, Chair, and good morning to all my colleagues and stakeholders on the platform. And just to take this minute to really appreciate what have been submitted as part of public hearing for this bill. However, Chair, I just wanted to understand from, is it Inyatelo Farrell, as led by Mayor Farrell Domingo, particularly on the issue of concentration, particularly in terms of the role that is being played perhaps by the department, as to what are they suggesting, because they're saying that there shouldn't be too much authority that is concentrated in a single department, and yet they are not able to, or they have not been able to make a suggestion or a recommendation in terms of what they think should be in terms of arrangements, particularly in terms of the authority on that one. Thanks, Chair.
Thank you, Mr. Sekoati. I will ask Chelsea to respond to that. We have made a recommendation in our actual written submission as well. Chelsea?
Yes, thank you so much, Ferial, and thank you so much, sir. Thank you for this question. Yes, unfortunately, time didn't allow me to get into the nitty-gritty of what we are suggesting as a way forward, but FATF speaks to allowing allowing the non-profit sector to be self-regulatory. And we see that there are some gaps in self-regulation, but in the absence of a legislative system that is holistic and that is all-encompassing and that responds to the needs of the diverse sector, the sector has been setting its own standards of what makes a credible organization, because as I said in my presentation, we want to comply. We want to be credible. So we set that higher bar. At the moment, looking at concentrating the regulation of the non-profit sector in DSD. It's a single list, it's a single register, it's a single standard of non-profits that's being applied to this broad sector. And we're saying that, yes, it does add a layer of credibility, but it's not meeting the needs of the sector. What we are advocating for is something that we're coining as decentralized regulation, meaning applying different standards of compliance and credibility to different sized organizations. The legislative ecosystem that governs a board of accountants or lawyers or architects should not be the same legislative ecosystem that governs old age homes, retirement communities, baby feeding schemes, youth development organizations, soccer clubs, environmental organizations. And at the moment, what the legislation is doing is saying, okay, we're responding to a need of compulsory registrations and the legislative changes that happened in 2022. But we're looking to the future and we're looking forward, and we need a system that guarantees credibility for all of these organizations so that we can identify the ones that are not and apply the appropriate remedy. Thank you. Does that answer your question?
Yes, thank you.
Thanks. Honorable Khanyan.
Chairperson, thank you, and good morning to you and fellow members. And let me welcome the presentations that have been made here and inputs made from various sectors. Number one, Chair, I think there is Kosatu has covered me on the extent to which the proposed bill will cover the illicit financial flows. But if the presenter may want to expand on that, that is welcome. Secondly, our country may be seen or regarded as a source or transit for human trafficking activities. I also wanted to check the extent to which the proposals in the bill cover that area. Thank you so much.
Thank you, Honorable Khanyan. Kosatu.
Chair, thanks to Honorable Lekhanyani, Chair. I think that's precisely why we support the bill. It builds upon existing requirements placed upon the FIC, placed upon the banks and other financial institutions to report suspicious transactions, in particular flows coming in from overseas, flows going out, etc. So it really does tighten that. And it also, Chair, I think usefully for us as well, is that it puts a stronger obligation on the FIC to share that information with relevant law enforcement institutions, and also to extend it to lifestyle audits as well. So I think First Chair is really expanding what we've already begun to do in the past few years, and to kind of tighten gaps that we have seen at times with regards to implementation and so forth. Chair, I think also we do find that there's these criminal syndicates have their fingers in multiple jars. If they're involved in drug smuggling, often they'll be involved in weapons smuggling. They might be involved in human trafficking, involved in the illicit trade of alcohol, fuel, etc., etc. So once you begin to pull one thread, you'll find many others begin to unravel. And I think that's why we support it. But I think Vice Chair, to Honorable Lekhanyani's point, that the really tightening of the definition of financial institutions, because we have seen that the financial sector has grown from just the traditional 4 or 5 main banks to a whole variety of financial institutions, some of whom don't have brick and mortar facilities but are really online. So to strengthen that, we have a catch-all approach. And I think also particularly, Chair, to strengthen the relationship and the obligation to cooperate between the FIC, the law enforcement institutions, the private banking institutions, etc., and of course linking to lifestyle audits. You might find that one particular intervention won't yield the results you would hope for, but if you begin to add additional interventions, they might actually pick up on something. And I think for us, Chair, this is the beginning of a journey. It's not a sprint; it's a marathon. But these are for us quite useful additions, building upon what we did in 2023 at SCOF. And I think for us, this is why we have to support it, and not just to support it, Chair, but we really hope to see it being finalized by Parliament by the end of this year. If that's physically possible, I don't know. But at least then by the first quarter of next year, so that the President can promulgate it. Treasury and other institutions, FIC, etc., the banks can also be good to put in place the different implementation. So it's still a bit of a journey ahead of us, but I think today we really want to commend the positive work of colleagues in Treasury and Government. And we do want to appreciate, Chair, that there are still ongoing engagements from themselves with other state institutions and the banking sector about how to really, really tighten the noose on these criminal syndicates. So thanks, Chair, and thanks to Honourable Lechanyani, Chair.
Thanks, Comrade Matthew. Those are the two questions coming from the honorable members. Let's move to the next round of submissions and invite Ama Bungan to present. Ama Bungan, over to you, 10 minutes.
Thank you very much, Chair. Let me see if I can share my screen. Let me just get it open. Sorry about this delay. There we go. I will just get into slideshow mode. Is it now visible?
Yes.
Thank you. Thank you. Thank you very much, Chair, and thank you to the other members of the committee for this opportunity to make a presentation on this bill. I echo the comments made by other members of the public and organizations that we welcome the developments and the commitment to strengthening South Africa's anti-money laundering and terrorist financing systems as a way to both fulfill our commitments under FATF, but also more generally to ensure that our systems are stronger and we can prevent these types of terrible financial crimes that do affect all South Africans and the NPO sector in particular. I just want to explain a little bit why Amabungani is interested in this bill. So we are a non-profit company, and so legislation that governs the NPO sector has a direct relationship to us. As an organization, we are registered as a non-profit company. We registered with this CIPC and as a public benefit organization registered with SARS. And then on a more broader position, we do have a strong tradition of advocating for the right to freedom of expression, and then its attendance rights, which include the right to freedom of association. And so that's the right that we believe is implicated in the regulation of NPOs, and why we believe it's important to make comment on the broader legislative framework that this bill falls under. So we have made submissions previously on various bills and instruments which concern the lack of independence of oversight bodies and increased responsibilities given to undercapacitated public bodies. And that's the focus that our submissions on this bill take. So just a reminder, this has been touched on by other members of the public and will be touched on later, I'm sure, but what we have focused our submissions on is what it is that FATF needs to see South Africa doing to ensure that we remain off the grey list in this next review. So recommendation 8 relates to non-profit organizations, but it was revised with a specific focus to prevent that any disproportionate measures are placed on non-profit organizations' activities, and as a way to protect non-profit organizations from the sort of risk-based implementation of FATF measures. So our focus is ensuring that the legislative amendments and regulation that are adopted to ensure that we remain off the FATF grey list works in a way that's proportionate, but also focuses on the risk of terrorist financing. So that's where our main focus has been. One of our biggest concerns with the legislation at the moment and the impact that it has on NPOs is on the overly broad definition of the organizations that are required to register under the NPO Act. This is an aspect that isn't addressed by the amendment bill, but something that we believe Parliament should consider as a way to better tailor its response to FATF's guidelines and to ensure that we are, as I said, remain off the grey list. So at present, the definition of organizations that have to register under the NPO Act are ones that, if it makes a donation to individuals or organizations outside of the Republic's borders, or provides humanitarian, charitable, religious, educational, or cultural services outside of the Republic's borders. To us, our concern with this is that it's very difficult to know, if you are an NPO, whether you fall under this definition. Making donations is one thing, but the type of services that are captured under this definition of NPOs that have to register are very broad and doesn't give specific guidelines on whether you are actually one of these, fall under this category of organizations. So as I mentioned as well, we need to make sure that any restriction on the activity of NPOs is directly addressing the risk of terrorist financing. For NPOs, it's not necessarily looking at how, if NPOs are susceptible to money laundering or other financial crimes or sort of conduct. The focus of FATF for NPOs is terrorist financing. And then the other aspect that FATF will be looking at is whether it's a disproportionate hampering of legitimate activity of NPOs. And our concern is that the current definition of NPOs that must register is not proportionate and does not directly relate to the risk of terrorist financing. So we make a recommendation that Parliament take further what is in the amendment bill to tighten this definition so that it's only organizations that operate out or have any engagement outside of the Republic's borders, but only with those jurisdictions that have been designated as high risk for terrorist financing. So this would mean that organizations that receive donations or conduct services in foreign countries that have been declared as very low risk for terrorist financing or medium, but something that hasn't been seen as being a high risk country, no longer are required to register under the legislation. The reason we make this suggestion is for two reasons. One, that it would lessen the administrative burden on the NPO Directorate, which coordinates the registration of these NPOs. And as we've heard from the NGO or NPO working group, it is quite difficult for the NPO Directorate to coordinate all of this, and they are not necessarily able to fulfill all their obligations. And then the second benefit would be on NPOs themselves, because it would lessen the compliance burden on those NPOs who make donation or receive payments or provide services. If it's not every organization that is engaged with countries outside of South Africa, then you've removed those obligations from them. Just to quickly touch a little bit on that compliance burden and the reality of the implementation. As we've sort of said, we do align ourselves with other organizations that have highlighted those practical difficulties of registering and maintaining registrations with the NPO Directorate. And so we would make that recommendation that the narrowing of the definition be implemented in this Amendment Act. But also what we would like to see as well is considering that Parliament to encourage the Department of Social Development and/or National Treasury to conduct a costing exercise in a way to understand what is required from the Department of Social Development to fully adhere to its obligations under this legislative framework. We know that it is complicated. There is work to be done to ensure that the registration of NPOs is done. And unfortunately, we feel that the Department of Social Development hasn't been adequately capacitated to enable it to do it. So we would recommend this costing exercise to understand what needs to be done to ensure that the department is better capacitated and can conduct its work efficiently and effectively. Our other one aspect that we're making submissions on, it relates to the independence and the coordination of the arbitration tribunal that's also mentioned in the amendment bill. We have two concerns over this. One, we are concerned that it isn't independent because it is located within the Department of Social Development. And so it's almost organization which is an internal appeal system rather than something that is completely independent. And then we also believe that the legislation should indicate that the members of the tribunal be sufficiently, or that the tribunal be staffed with individuals with sufficient legal and experience of the NPO sector. And that could be an amendment made to the legislation, just that a set number of members of the tribunal have either legal expertise or NPO sector expertise. And that's just the last recommendation, that we indicate that the Act be amended to include that regulation. I'll close there, but I'm open for any questions or comments, and thank you again for this opportunity.
Thank you, Ama Bungani. Law Society of South Africa.
Morning, Chair, and good morning to the honourable members on the call and all the stakeholders represented this morning. Can you hear me, Chair?
Yes, we can hear and we can see you.
Thank you. My name is Nolisa Sia Sotendwa. I am from the Law Society of South Africa. I am a senior manager at the Law Society of South Africa. I will just try to flight my my presentation. I trust it is visible to everybody.
Yes.
Chair, thank you very much for the opportunity that the LSSA has been provided to make comments on the General Laws Anti-Money Laundering and Combating Terrorism Financing Amendment Bill. I am also accompanied by my colleague, Nonkululeko Sibambato, who is a legal officer and researcher at the LSSA. I will then take through the committee on the presentations and submissions made by the LSSA. As many other presenters have indicated, the LSSA supports the fight against money laundering and terrorist financing. I think it will be important for me to indicate that the Law Society of South Africa is a representative body of the legal profession. We represent the attorneys' profession, and the constituting organizations in the LSSA is the BLA, NADEL, as well as the independent attorneys. Our support for the bill, Chairperson, also is primarily on the basis that we are of the view that the proposals, particularly as they relate to lifestyle audits, is a very important one, even though it does not target the legal profession specifically, but it does pose a risk as attorneys' records may become an entry point for the scrutiny of certain individuals or who are clients of the legal profession. From a FATF point, the Law Society is of the view that differentiation between high risk and low risk legal services is very critical. We do acknowledge that the alignment across the non-profit organizations, the FICA, Financial Intelligence Center Act, and the Companies Act, as well as the Financial Sector Regulations Act, is a long overdue process. However, there are various or several provisions that raise constitutional, practical, and administrative law concerns that we would like to highlight from this point. We do note, Chair, that there were some concerns that we had raised in our previous submissions, which may not have been necessarily substantially addressed, but we do trust that that process will still be taking place. We want to raise a concern, or rather some points, relating to the Non-Profit Organization Act as it stipulates on the bill clauses 2 to 5. These clauses, Chair, include a number of amendments to the Act that have potentially wide-ranging implications, such as the extending of the Directorate's function to include monitoring and enforcement of NPO compliance, establishing an arbitration tribunal mechanism against administrative sanctions, refusal to register and permits, as well as permits condemnation. Empowering the director to issue compliance notices and to impose administrative sanctions on registered NPOs and increase the maximum penalty offences under Section 29 to a fine not exceeding 1 million or imprisonment. We note that the bill does not expressly define the monitoring power of the directorate, nor does it set out the scope of inspection, access powers, or documentary requirements. Our recommendation, Chair, is that these powers must be clearly defined and that the exercise of these powers should not authorize entry, search, seizure, except where the authority or the law then permits. We also note that the bill empowers the director to impose administrative sanctions without specifying the determining factors, proportionality requirements, or maximum penalties that may be imposed. Our recommendation, as we view this as an administrative, these penalties without statutory limit may be vulnerable to review. Our recommendation is that the bill should consider amending and include these factors together with mitigating and aggravating factors, which may well also be represented or reflected in other legislation such as FICA, Competition Act, as well as the financial sector. This may then, Chair, assist in the vulnerability aspect that we touched on. When it comes to the amendment of the Financial Intelligence Center Act, we want to highlight the FICA lifestyles as set out in clause 6, 7, and 14 and 19, which addresses the audits. The bill, in essence, introduces an extensive power to the financial intelligence sector to conduct lifestyle audits. We appreciate that the term concept of lifestyle audit is defined in the bill. However, we are of the view that it does not contain a detailed framework regulating when such lifestyles may be initiated, who may be a subject of those lifestyles, evidentiary thresholds required before lifestyle audits may be taken, procedural fairness of the affected persons, notice requirements, and available appeal and review mechanisms. And it is our view, Chair, that the absence of these elements may raise constitutional concerns, particularly as they may relate to Section 14, which is the privacy clause of the Bill of Rights, as well as Section 33 of the Constitution, together with the provisions of PAJA. Our concern comes, Chair, from the fact that a lifestyle audit may be initiated following a request from a broad category of organs of states, while the bill does not significantly provide or sufficiently provide for the affected persons to be informed of the process or afforded an opportunity to make representation or respond before adverse consequences then take place. We are mindful of the fact that it is an important process and lifestyle audits are an important tool in the fight against corruption, money laundering. However, we are also of the view that it is important that the exercise of that power be balanced against constitutional and procedural safeguards that are currently in place. And in assistance of that, we make the following recommendations, Chair. The act, or rather the bill, may also include that the centre may only conduct a lifestyle where there are reasonable grounds based on information lawfully obtained, suggesting a material discrepancy between known lawful income and identified assets, expenditure, or activities. That is just a frame and a guide of how we would see a clause coming in. We also would include or propose an inclusion of a provision that states that any lifestyle audit must be conducted subject to the Constitution, PAJA, as well as POPIA. Access to and sharing of information is one of the aspects that we would also like to highlight. We are of the view that the information sharing power potentially is excessive and goes beyond the FATF requirements. We recommend that the power be narrowed by replacing the phrases such as has an interest in with a phrase aligned with requires the information of the lawful exercise of a statutory power or performance of a statutory function. The formulation of this clause that we propose, Chair, is quite consistent with the terminology commonly used in legislation and also included in POPIA as well as PAIA, Chair. In respect of the record retention period extension, we support the extension of the record to, as stated in clause 10. The one concern that we may have around that on the bill is that it does not contain a transitional provision, and this may create uncertainty as to whether the existing records exceeding 5 years should be retained and whether this amendment applies prospectively only. And we recommend that an appropriate transition provision be included in the bill. In respect of the Companies Act, the definition of obliged entity as set out in clause 27, our view is that it is overly broad and it gives the minister power to create regulated entities by regulation. Our recommendation then, Chair, is to have the concept or the definition narrowed such that the minister may prescribe categories of accountable institutions, supervisory bodies, or other persons that regularly obtain beneficial ownership information. We also note that clause 28 requires the obliged entities to report material beneficial ownership discrepancies. However, there is no obligation on the Commission to investigate these. Not only to investigate, but also to correct their records where necessary and also to notify. And I think this was also an element that was touched by a previous speaker. Our recommendation then, Chair, would that there is a provision be included that requires the Commission to notify affected companies, provide an opportunity for response, and to determine whether matters within a prescribed period of time. Our recommendation regarding the deregistration of companies is that there must be an inclusion of a provision that requires the Commission, like the previous point, to issue a compliance notice, allow for rectification, and permit representation before deregistration of companies. In respect of administrative fines, we make a recommendation, Chair, based on the fact that the bill does not prescribe factors that guide the Commission when determining the amount of an administrative fine. Our recommendation is that there must be an amendment that includes consideration by the Commission of factors such as the nature of the contravention, duration, previous offences, prejudice caused, and the ability as well to pay be assessed. The review of administrative fines, we understand that clause 32 provides for the review by the company's tribunal. Our concern there is that the provision does not suspend the payment of the fine pending a review process, and our recommendation would be to suggest that a provision suspending payment be also considered and included pending the review of the process. In respect of the Financial Sector Regulation Act, we have picked up that two concepts similar in nature and similar outcome are used in the bill. However, our view is that these phrases are vague, and we suggest a more substantial phrase or rephrasing to give a bit of substance to those clauses, and our proposal is along the lines of having a clause that sets out having substantially the same economic function, risk profile, or consumer profile. And these are concepts, or this one particularly, these are concepts that is generally preferred as well by our courts. When it comes to privilege and protection, we recommend that this clause must make provision for the legal professional privilege and constitutionality protections in respect of clauses 39 as it expands obligations in section 131 of the Act. In respect of the investigation powers, our suggestion is that the bill should include an amendment that requires written decisions stating the grounds of suspension, scope of investigation, as well as statutory purposes. As we close, Chair, we do wish to again express our gratitude for this opportunity to be able to express where we have found legislative gaps in the bill. While we note and appreciate the number of significant amendments which are crucial to the bill, we also do note that there are certain areas which may raise a bit of concern, and some of the inconsistencies that we've picked up also relate to clauses 15, where we are of the view that the section there, or the context or the text, is incomplete, and we would like that paragraph to be reviewed. Clause 1, my apologies. We recommend that section 33 of the regulation should apply automatically to close corporations, or separate regulations should be made under the relevant legislation, such as the close. We also, Chair, there is this concept of obliged and obligated entities. We would also suggest that there is consistency in the use. It would appear that they are used interchangeably. Perhaps there should be consideration for consistency in that. Lastly, Chair, our recommendation on the general clause against the potential constitutional challenge while preserving the FATF obligations. As we state there, any power exercised under this Act relating to the collection, sharing, retention, or disclosure of information must be exercised in the manner that is reasonable, proportionate, and consistent with the Constitution. That would be a clause that we would propose find itself in the relevant legislation. Thank you, Chair, on behalf of the LSSA, and also we acknowledge the contributions by some of the members towards this process. And we will take any questions, Chair. Thank you.
Thank you. Next, Ms. Louise Big. Ms. Louise Big.
Yes, thank you, Chair. Can you hear me?
Yes.
And I hope my video is working. It has been a very interesting morning listening to the presentations, and I very much understand the kind of resources that have gone into making the comments on this important piece of draft legislation. And I think what was very relevant to me listening to today's proceedings is that there is still much work to be done. And I think that is indeed the power of public participation. And especially when you consider the NPO working group and the amount of research and the amount of publications that have gone into understanding how this sector should be regulated. I think it certainly tells us that this bill is a start, but that there is much to be done. In terms of my submissions, I focus very much on the practical manner in which certain parts of the bill have been drafted. I will speak about some very select issues. I'd like to begin with the idea of information capture. There hasn't been much spoken about the way that all of the ideas in terms of the FATF recommendations rely very much on the way that information is captured. And if the time, effort, and resources are being put into amending multiple pieces of legislation at once in a General Laws Amendment Act, it may be opportune to think about amending these pieces of legislation in such a way that the gaps in collecting information from nonprofits are filled. My submissions look at the way that the different forms of nonprofits from a legal framework perspective, the way that they interact with different regulators. And the submission looks at how the Companies Office, how the Master of the High Court in terms of charitable trusts, and how the in particular the legislation relating to those entities could be amended to better collect information. A glaring concept that comes out is that when a nonprofit organization is required to include information in its constitution or in its founding document, the need to describe the fact that the activities take place outside of South Africa, or are donations being made to individuals outside of South Africa, or are the activities described and happen outside South Africa, is not actually included as a requirement in terms of most of the founding agreements. So you're looking at nonprofits that have either a founding document as a MOI if they're a nonprofit company, or as a trust deed if they're a trust, but they don't need to include that piece of information about their activities or their objects when they describe that. And what that means is any time that that nonprofit interacts with a regulator, for example, with an accountable institution under the FIC, or with the CIPC, or with the master, there's nothing to flag the point that they are going to fall under this inherent risk profile that the bill envisages in terms of compulsory registration. So that first piece of information is never being flagged. If a nonprofit organization doesn't include in its constitution that it's acting in an inherent risk territory, and I do like the idea that was put forward by Abu Bangani about looking at, which are the real risk territories in terms of AML and CF terror. The whole point is that if it's not included in their founding constitution, then anybody else who interacts with them going forward doesn't pick up on that risk, or if they're not registered, doesn't pick up on the need that they should have been registered. The suggestions that I've made in the submission are, as I said, very much based on the technical drafting, and much of what I've said in my submissions, obviously being so late in the day, has already been dealt with multiple parties that have spoken. So I'm just going to pick up on one or two things that I think are quite interesting. I think it's very important that provision be made for the electronic fundraising platforms that are being used. I think multiple nonprofits are using social media and electronic fundraising platforms to raise funds from the general public. And I think that there's very little regulation and almost nothing proposed in the bill that allows the public any kind of understanding of verification of these bodies. Usually the fundraising platforms indicate that they do not certify or verify the registration details of these entities. There is no requirement within the bill for entities that fundraise and use social media to have any kind of registration details listed whatsoever. So in my comments, I work on a scenario where an online fundraising platform is used where, in this instance, the PBO number doesn't match, the NPR number is wrong, but the fundraising platform is still raising funds for that entity. On that note, one of the major ideas of who's interacting with nonprofits includes the donor sector. And obviously we don't bite the hand that feeds us, but it is a way to create opportunity for good governance and good practice. So if you have a large corporate who is making a donation, for example, to a nonprofit who is acting outside of South Africa and therefore not necessarily registered as a Section 18A tax-exempt institution under SARS, but is still donating to this cause because it's something they believe in, say, for example, humanitarian work across the borders in a place like Mozambique, which does have some terror risk, that corporate will make the donation. It will not receive a Section 18A certificate, and it will not require to do a SARS third-party return, but it would list that donation in its annual financial statements in terms of its CSR reporting and its giving. But there's no requirement for any kind of audit of who the beneficiaries of that organization would be in that foreign country. And it's interesting that SIBA is with us today, because part of what I talk about in the submission is that it might be interesting to work with the auditing profession to see if the concept of reportable irregularities can be extended to create another net in which to catch information about entities working in risk-designated territories outside of South Africa. Finally, I'd just like to talk about for a moment the idea of open data standards and real data sharing. I know that the bill talks a lot about the sharing of information across different institutions. Unfortunately, the NPO Directorate is often not included in the list of new entities that are being dealt with in the draft, which seems strange. And finally, I think that it's absolutely critical that there is some kind of mechanism for whistleblowing and for the public who interact with nonprofits in the most direct way to be able to call out irregularities or concerns. And most people will know that while there has been in the past, and there is still a small whistleblowing tab on the Directorate's semi-functional website, there is no real mechanism or regulated mechanism for people to raise any kind of concerns. And I note that the Public Procurement Act is mentioned in the draft, in the bill, and that act creates a mechanism for the public to raise questions. And I think it's interesting that that has not been included here. Thank you very much for your time.
Thank you, Ms. Louise-Pick. The last stakeholder, Dr. Jean Nell. Over to you.
Thank you very much, Chair, and thank you to the committee and for the opportunity to speak to people today and share my presentation. Would it allow me to share my screen? I assume that's the case. Let's just go screen 3. There you go. So yes, thank you for the opportunity. And I just want to echo, and I think it's incumbent on me as the last person presenting tonight, or rather today, it's tonight in Melbourne, that I, along with all the other present or speakers, wholeheartedly support regulation that would support and strengthen the sector. And I should note that my presentation focuses on the NPO sector. And I very much support measures that would strengthen the sector, including protecting it against abuse for terrorist financing. But care should be taken that the proposed amendments do not have an unintended or disproportionate negative impact on the South African NPO sector. The sector plays a very significant role, and I'm very thankful for the working group for their presentation, because it also means they provided context and I can jump right into my presentation. Now, a little bit about me, if I can, I'm a South African qualified lawyer, but I'm based in Melbourne at Monash University at the Business School. I have a graduate certificate in money laundering control, a master's degree in human rights, and a PhD in corporate governance. And that's where all of this connects when you look at the NPO sector. And my research focuses on financial crime and AML CTF regulation, but specifically through the lens of not-for-profit organizations, civil society. I've been active in the NPO sector for more than 30 years, commencing in 1991 with street law in Bloemfontein in South Africa. But it's clear, I'm now at Monash, and I am also a research fellow with the Financial Integrity Hub at Macquarie University, but I write in my personal capacity, and I'm presenting here today in my personal capacity. This does not reflect views of my employer or institutions with which I am affiliated. Much of my research and my presentation today is informed by my research on FATF Recommendation 8 and the methodology. So I want to start by just saying this, and this is the heart of my submission, my presentation, and I'm delighted that many of the presenters going ahead of me and presented earlier actually echoes this. If the intent of this bill is to secure a better rating in the current FATF mutual evaluation, the measures, the NPO measures in this bill must be focused, proportionate, and they must be risk-based. Round 5 essentially is about effectiveness and proportionality. Keep in mind that effectiveness ratings do not carry over from round 4. So South Africa must demonstrate effectiveness across all the 11 immediate outcomes again. The technical ratings may be pulled over from round 4. Effectiveness is a clean slate. You have to show effectiveness from the outside again. Now, if we look at the assessment, yes, there is a connection between technical compliance and effectiveness. Technical compliance is complementary and should support effectiveness. So first thing that's going to be asked is, let's look at regulation. Let's look at the measures you have on paper, you have in place. In part, what we're talking about today. Are they focused? Are they proportionate? FATF's interpretive note to Recommendation 8 highlights that countries need to understand their risk because there's a diversity within individual national sectors. There's differing degrees to which parts of each sector may be at risk of terrorist financing abuse. So countries need to develop an understanding of the different degrees of risk posed to the NPO sector, but also to different subsets within the sector. It asks, so do you understand your risk? Do you clearly show us that you understand the risk? It will ask the country, show us how do your measures respond to the risk that you've identified? And that speaks to the presentation that Caroline made. It specifically in round 5 because of the changes to recommendation 1, that's treated as an overarching lens for assessors. The question is, do you identify higher and lower risk? And does your regulation respond to higher and lower risk scenarios? And very importantly, and that's an issue that I think has been raised throughout all the submissions today, round 5 is also about implementation. And I've just picked 2 quotes related to instructions to assessors. And they speak to the fact that, 1, are you implementing the regulations you do have in place effectively? And they very much also ask about capacity. The methodology specifically, and the recommendation 8 and the interpretive note specifically says countries should provide appropriate authorities which are responsible for oversight, monitoring and investigation with adequate financial, human and technical resources. So that's the broader context of round 5, and that is the broader context through which we need to look at this bill, and from my view, specifically looking at NPO. So I'm going to specifically focus on the NPO Act, and in summary, I recommend 3 things. First of all, amend Clause 5, that's Section 30, because as Caroline so very clearly explained, at the moment, yes, it is very positive that it has a cap. But recommendation 8 is a terrorist financing standard. If you ask about effectiveness and about targeted measures and about applying sources to where it's really needed, risk-based, the question is, why would you not specify that breaching Section 30 should be with the intent to facilitate terrorist financing? So that's my first recommendation. The second one is about Section 12. And again, I'm not going to go into the detail of that because Caroline delineated that really, really well. It is about identifying the risk, designing measures that responds to the risk. In doing so, we have a national risk assessment that recognizes that there's a difference between different jurisdictions, that actually uses the terminology higher risk jurisdiction. Why then is this not displayed in the regulation? At the moment, we have a blanket regulation. If you operate outside South Africa, you have to register. It doesn't distinguish between NPOs delivering cross-border support into Lesotho and NPOs working in the DRC. Very different risk scenarios. One of the things that the working group mentioned is that part of the South African NPO sector is that we show up when it counts, which means we also have a positive supporting relationship with our neighbors. Now, yes, in terms of neighbors, the risk may vary, but that's the whole point. We need to make sure that the regulation and the way in which Section 12 is formulated recognize that, to make sure that it's targeted. We need to make sure that when we have a section on criminal exposure, that it's targeted to terrorism. We need to make sure that if we say you need to register, our measures should show that this is really a response to a risk. If we want to use the Act and say, well, you need to register also because there's concerns of corruption and money laundering, then you need to specify that clearly. In Section 30, for instance, you would have a tier-based penalty, reserving the maximum penalty only for terrorist financing. And in terms of registration, I have a question. Bring me evidence anywhere in the world, really, where registration per se addresses corruption, effectively addresses dishonesty. So we really need to make sure that the measures we put in place clearly show that they respond to a risk that we've identified, and they respond to that risk in a targeted, focused manner. The third thing that I'm looking at is the fact that the bill does not reflect the June 2026 humanitarian exemption that FATF integrated into the standards and the methodology in June 2026. Now, keep in mind that a country is assessed against the standards and methodology as they exist at the date which its technical compliance submission is due. Now, if I work back from October 2027, the plenary mentioned, the relevant date would be the 1st of July 2026, which means that exemption is part of the assessment, so it should be included in the bill. It's relevant when I speak about NPOs because the humanitarian exemption specifically also impacts NPOs. So I think, given that the bill already, the FIC, recommends insertions into Section 26A and 26C of the Act, I think there's room to insert that to ensure that we address this, because if we do, it closes a technical compliance gap. Ironically, I'm saying there's things we shouldn't do for the NPO Act because we're trying to fill gaps, the wrong gaps, probably. Whereas in this instance, add to this bill and close this gap, because it also protects legitimate humanitarian activity, which is consistent with the FATF's Round 5 requirement that counter-terrorism measures must not unduly disrupt or discourage legitimate NPO work. Now, I want to jump to the next slide. Just very briefly, I've included this, and I'm not going to go into the detail, much of it's in my submission, but the message of targeted, focused measures runs like a golden thread. Sorry, through all of the MERs that's been published. I haven't got Serbia here, but all the MERs published in 2026. And very importantly, Italy has been downgraded from their previous recommendation 8 rating. The reason? Because although they have a risk assessment and they've identified the risk, there is no clear evidence in their designing of their measures that they are in fact accurately responding to the risk identified. And Austria, in fact, has a moderate effectiveness along with Singapore and Italy in independent outcome or immediate outcome 10, because, and that is relevant in terms of the sanction recommendation I make, immediate outcome 10 is not just about NPOs, and we are paying an exorbitant amount of attention to NPOs. It's also about sanction implementation And South Africa has been criticized for sanction implementation in the 2021 MER. So it's well worth paying attention and making sure that the sanction implementations are also up to standard, because we might find ourselves focusing so much on the NPO sector, indicating that we are not in fact appropriately focusing and targeting our measures, while we lose sight of the sanctions. And that's exactly what happened to Austria, and they ended up with an immediate outcome, moderate effectiveness. So it's equally important to pay attention across the board to sanction as well as NPOs. Yes, and with that I want to conclude. I actually want to just reiterate my initial statement again. If we want to secure a better rating, we need to make sure that we are focused, proportionate, and risk-based. South Africa enters this evaluation with recommendation 8 still rated partially compliant. Remember, no effectiveness ratings will carry over. I'm concerned that our rating might in fact be lower than what it was in 2024 with the updates. And that's what informed my recommendations in this submission. The message for round 5 is significant improvements are needed to effectively implement risk-based measures to protect NPOs from potential TF abuse, and importantly, without unduly disrupting or discouraging legitimate activities. And the 3 amendments I propose above, Section 30, Section 12, insertion of a June 2026 humanitarian exemption, they will all strengthen South Africa's position in the current mutual evaluation while protecting a very important sector that provides a lot of legitimate support. And yes, I'd welcome any questions. Thank you very much.
Thank you, Dr. Nell. That is the last submission. And then let's move to questions from honorable members. Honorable members, there we are. Those are the submissions from the public. Do we have questions to stakeholders? It doesn't look like we have questions. So thanks very much. Okay.
Okay.
Who's raising a hand? Chelsea.
It's me, Chair.
Mautu, are you raising a hand? Oh, I see this one of Chelsea. Okay. Honorable Mautu, over to you.
Okay. Thank you very much, Chair. Greetings to yourself, to the colleagues, and to everybody on the platform, and those who might be watching the proceedings online. Chair, I just have one question. Well, before that, let me take this opportunity to welcome the presentations by the various stakeholders. We agree with COSATU on their presentation, Chair. Just on Dr. Nell, Dr. Nell says she's presenting in her individual capacity and not representing the institution she works for. But throughout her presentation, it's on a Monash University letterhead. So, and I appreciate that she grew up in South Africa, she studied here, and she's representing us very well out there in the world. But did she seek consent from the university to use their logo before she can present? And secondly, She did say that the views are her views and that not the views of the institution. And therefore, what's the significance of using the university or the institution's logo? And when is she planning to come back to South Africa? And I'm saying this because, Chair, we've seen with NPOs and things like that, that they get more support from outside the country, which wants to dictate how Parliament should run. I mean, we've got things that we do now that were initiated by these groupings. We now have what we call Political Party Funding Act, which came through NGOs and went to court, and the court compelled Parliament to draft a legislation in that regard. So you've got these voices that are outside that wants to influence what happens in the country. And sadly, most of them, they don't actually stay in this country, yet they want to influence how things are run here. So we're interested to know what's the future of Dr. Nel. Is she planning to come back? Because she advocated very strongly for the NPOs. And we wonder what's the influence? Because we sit here with a problem in South Africa, created not by us, Chair. And as politicians and as members of Parliament, we get strained a number of times not to execute that which our constituencies want us to execute. And instead, we are dragged to court. And there are many examples. I mean, you know the issue of Gauteng, where the buildings got banned because when the municipality said we want to renovate these buildings, it's the same NGOs and NPOs who took municipality to court to block that. So there's many examples that I can give. So, and it's these outside voices that comes in the form and shape of NPOs and NGOs who influences how we run our country. So we're really interested to know what is the interest here, and are you going to enjoy the fruits of what you are trying to plant here in the country? That will be it from my side, Chair. Thank you.
Thank you, Honorable Mautwe. Any other question from honorable members? Chelsea, you are not allowed to ask a question now. Is there space for honorable members? Take your hand down. Okay. If that's Chelsea, if there's something that you want clarity from, please call Alan directly. He will clarify with you. Okay. Dr. Nel, please respond to the question from Mautwe.
The honourable member raised a fair few questions. I think, let me start by firstly saying I'm an academic, and it's in the nature of research, and that is the work I do. The time I spend doing research that's my job. And I work for Monash University. And it's in the nature of my work that I complete contracts, provide opinions, publish research, also make presentations as an employee of Monash University, as an academic. And that's why I have, in fact, I must use a Monash background because I'm doing this is my work. I think that would, and the nature of research is that by definition, my views are not that of Monash University. There are thousands of people, and I'm sure the honourable member knows that, so I apologise for saying something that you already know, but there are thousands of people employed, and that's also the case for universities in South Africa. So I speak as a researcher, but I'm a researcher based at a particular academic institution. Hence, the background, and hence my slides would reflect that too. The second thing is I come to this as a researcher. Yes, I do have a history with the South African NPO sector, and interestingly, I have had various discussions, and I also participate in the working group activities. But the research we do it's providing information, because better data, better information, better evidence lead to better decision making. And I provide this advice and this research into several countries in the world, not just South Africa. I do it here because I have a personal interest, but I also do it in Papua New Guinea, in the Netherlands, in the US, several other countries, in Fiji, I don't want to make the list, but that's the point. It's broader than that, and it's about providing information and providing research support. All I can do is give the information. The ultimate decision making, that is the role of Parliament and this committee. Do I come back? Unfortunately, my life, like many people, almost everyone on this call, I would presume, is not disconnected. So I have relations and family, not just in South Africa. So I'm one of the people that live with the tension of having hearts in multiple places. And it's not necessarily an enviable position to be in. But I wish the committee just all the best, and absolutely the best for the country, but also the sector, given that it plays such an enormous role. Thank you.
Thank you, Dr. Nell. Okay, there we are. Before I close, Alan, can you make an announcement about the next step for next week?
Yes, Chair, thank you. Just to advise members and those on the platform that National Treasury and the other departments will respond to all submissions next week, Wednesday the 19th. It's a virtual meeting from 9 to 12. I will send the meeting link and agenda to that meeting sometime Tuesday afternoon next week. Thanks, Chair.
Thanks very much, Alan, for that announcement. And also thanks very much to the honorable members, to our stakeholders. Thanks very much for making the submissions, and to the media support team. Let's meet again next week, same platform, to get a response from National Treasury. The meeting is adjourned until we meet again next week, Wednesday. Thanks very much.
Thank you, Chair.
Thank you, Chair. Thank you all.
Thank you.
Thank you very much. Bye.